Jess.
Just means that when I listen to it, I don't like it.
Yeah, but it's such a blanket statement you don't like, Jess. What are you doing right now?
Nothing.
Welcome. We are back. Another day in the market. What's up, Danny, KTF, Connor, Jeff, AK, Mr. 90210, IMEI, Repair in the chat. How's everybody doing? Yeah, another pullback day. Again, this goes back to last Thursday night's stream when I was talking about the potential for a market pullback. It looked like we were getting overbought. There was like a rising wedge, a lot of classic bearish divergence on the low time frames. And I was thinking that a pullback for the next couple of days was likely. That's what we've seen so far. I think now we're finally getting to a point where now you were kind of overbought on low time frames last Thursday. Now I think you're starting to get oversold and you're kind of getting those oscillators to flip a little bit over back towards bullishness, in my opinion. But of course, we do have a lot of crazy things going on. We have major earnings. Just let's go take a look at the calendar. We have FOMC meeting tomorrow. Again, this is not the stream for news, so don't come to the stream looking for my opinions on whatever. I'm just gonna see how other people react to the news. I don't have an opinion on it. All I do as a trader is I see how the news affects the charts, and then I trade based off the charts. That's all I do. But of course, you have to wait for the news to come first. So we got that going on. Of course, then after the day after that, which is Thursday morning, we have GDP numbers. It's pretty much like the biggest week of the year in the market. But today we had Alphabet and Microsoft report after the close, UPS and Coke before the open. Tomorrow we have Shopify, which was down a lot today already, but we have Shopify before the open tomorrow, Boeing, Spotify. And then after the close, Meta, which I'm actually going to be really interested to see the Meta earnings tomorrow. Ford, that's going to be big. Qualcomm, Etsy, Teladoc, there's a few other ones in there. QuantumScape QS, my biggest trade ever, February 2021. I'm always going to remember that. So a lot going on within the next couple of days. I'm sure we're going to be looking at a very different market on Thursday night's stream, which will be the final stream of the week. But let's get there first. And before we continue with all that, let's talk about crypto and then some other markets. So let's get started with Bitcoin. Looks like it sold off a little bit. Pretty much got close to back testing this large wedge. Got a nice little bounce off the lows on the day. Bullish pin bar candle at the close. On the 4 hour, you're kind of just barely holding on to this demand line of this wedge or bull flag, whatever you want to call it. Really no divergence on the 4 hour. So you're just hoping that you can hold above probably this most recent low around 20.7K. And then I'd say your next resistance is around 22.5K from these highs on July 7th. Maybe a little bit over here at 22.3K from this high as well. So that's where you're at short term for Bitcoin. I still like the higher high and the higher low trend that it's kind of holding for now, as long as it makes the low above 19K really. So it just needs to do that. Hopefully it gets this back test eventually, and then also hopefully this MACD getting close to red doesn't affect things too much. Moving on to Ethereum, very similar candle today, pretty much a bullish pin bar candle. So really interesting. You had a bearish candle yesterday, the bearish engulfing candle, followed with the bullish candle, the bullish pin bar candle. So just kind of flipping the momentum very quickly. Of course, that was a pretty wide drop from yesterday's high to today's low. That was a 16% swing, and then you bounced up, looks like about 5 or 6%. So we'll see if we can get some follow through bouncing after those bullish candles printed on the daily. You got like a 4-hour bullish engulfing candle too. MACD is going back towards green. You do have a little bit of resistance here at 1462, which used to be your support though, so keep that in mind. And that's where you're currently at with Ethereum. Moving on to Litecoin, you guessed it, another bullish pin bar. Again, you know, there's not too much to give updates on here. We're just looking for the higher lows and the higher highs, and for now, as long as Litecoin stays above like 47, you pretty much got that potential of a trend continuation to occur. And then Link, sitting pretty much almost to the cent, right at the area where I alerted it, is again another bullish pin bar. You can see the theme going on in crypto today. But any lows above like this $5 to $6 support area is a low that I would like to see. So really doesn't need to be overcomplicated. I mean, you could even look at this as like one big range between like 530 and 760. So that's what you've got for crypto. Moving on to other markets, the US 10-year getting a small bounce off the neckline of this bearish head and shoulders pattern. Also kind of a bullish hammer candle, not the best context for it, but you know, maybe this does lead to like a short-term mini rally, but I do still believe that this will break down in time, regardless of any rally you get off this technically support zone. So as long as you're below 3.10%, I'm still bearish on this. So you've got a little bit of wiggle room in this whole entire area, but I'm just saying I would be surprised if you got above those highs because you've rejected it twice now. Moving on to crude oil, not much of any change. It had a nice bounce in the morning, then kind of went to close on this back test of the wedge. We're still above the 200-day moving average. Really no change since the stream last night. Gold, no change as well. I'm sure silver didn't do much either. So pretty much nothing too crazy going on in other markets. The dollar currency index did get a little bit of a bounce today, and we did talk about this last night. The bearish pattern, which are these red lines, flipping into a bullish pattern, which are the white lines. Literally last night I charted out this wedge, or this bull flag, and you can see it's already been playing out very nicely. And then I guess it's testing this little area. See, it was support here, resistance here, now you're testing as resistance again. So you're just testing that. The Hang Seng Index does look pretty interesting. This is a 4-hour chart, but you pretty much got a 4-hour dragon pattern breakout for the Hang Seng Index. So maybe keep an eye on Chinese stocks for the next couple of days here. It's a very interesting flip. So this is my 4-hour view on that. The daily kind of looks like it's like broke out of the wedge. Now it's kind of put in two lows. I mean, it's a pretty decent chart setup right now in my opinion. Hopefully can just hold above like 20.4K. So those are your other markets. Let's head over to stocks now. What's up, Spiderwebs, Keanu Trades, and B Johnson in the chat. Hit the like button on your way in. And let's talk about the overall stock market, all right? So let's go over to the 1 hour first, and let's get started. So when we were up right over here, all right, literally at the top over here, I was saying that it's looking like we're going to be getting a pullback. I was looking at this demand line that was testing a breakdown. This was last Thursday. I was looking at this bearish divergence on the MACD. Both of those things played out very beautifully. And what I also said on that stream last Thursday, I believe, if I'm remembering correctly, is that this could set up your backtest move. And I said either a backtest of this previous range high or just a backtest of the wedge. Either one is possible. For right now, you're testing the backtest of this previous range high. And you actually did get a little bit of a bounce off a bounce off of it today. And you also had a bullish pin bar on the 1 hour candle. You haven't really fully back tested the wedge breakout. I think you'd need to drop like maybe another 1% or so to be testing that. So yeah, if tomorrow is a good day for the market, and again this is fully based on the news, then I would just say you just want to hold above this zone over here. I'd say around 389 to 390 ish. And if tomorrow is not a good day and we continue selling off, look for some potential support to line up. I'd say probably somewhere around like 386. That also lines up with almost this low from May 12th and kind of this low from July 19th. And that would also be the backtest of the wedge. So those are the two levels. Hopefully, I mean, more optimally, you hold 389, 390. If that breaks, then maybe look for around like 386-ish. I do see a little bit of support around 385 just beneath that. But that's really where you're at. I mean, of course, this could also set up like a wedge structure for tomorrow. I mean, you don't even have to, you can look at it like this, which is how I currently have it charted, which is already kind of testing a breakout. Or you could even look at it a little bit more aggressively like that. And probably I'm going to leave it like this. So keep an eye on this wedge. I mean, it's not bad. You could see you broke above this resistance point. You broke above this resistance. You rallied up all the way over here. And now you just dropped back down to retest this previous resistance as a support. So this is very textbook stuff. I mean, you shouldn't be surprised at all. And now this is the time where you really want to start paying attention and see if we can get this continuation. Because again, what we've seen throughout the whole entire year is, yes, we've got these bear market rallies, but they all ended the same way, which was a violent continuation of the bear market. So what we're looking for now to see if this is really a big different, what's the right word to use here? To see if this is a really big different just run in general compared to the runs before is if we can maintain these previous levels of resistance, flip them into support, and then move higher. That's really what you want to see for the market. So I think we're approaching those levels. I will be looking for a bounce either tomorrow or the day after. And I'm starting to flip back towards a little bit bullish on the market here. One thing I will say though, I just noticed this as well actually, is you do have some 4-hour classic bearish divergence. So you have to keep that in mind. You're going to have to hope that gets a little bit invalidated. And even if it doesn't, again, we have so many different, even if we can't hold this back test on the 1 hour, which is the back test of these two highs over here, then we still have this 4-hour back test that could always be possible. And then your classic bearish divergence can play out. Your MACD can go back over to green, and then it's all good. If that doesn't play out, then again, we also have the huge wedge back test. And this is what I was saying last week. I was saying I want to see a back test. So I'm not complaining that we're pulling back in the market at all. This is what I want to see the market do. Because if we were to have just kept going literally straight up, I mean, at some point you're probably going to see literally straight down. So you want to see consolidation on the way up. You want to see resistances flipped into supports. For right now, this is healthy price action in my opinion, from like a more like midterm point of view. Short term, it's pretty much all dependent on the news, but I'm not complaining with this price action at all. So now let's move on to the other indices. The QQQ, this looks a little bit different because you're now back under a critical zone. This blue zone over here you can see was resistance and support. I'm not a big fan of how you're back under it, but you still are kind of back testing these few highs that you put in a couple months ago. So again, it's not the end of the world, but hopefully at some point you just pivot at any low higher than these lows over here, and then you reclaim that blue zone. So that's probably the main thing I'm looking for, just a continuation of this higher high and higher low trend. On the 1 hour, I have a little bit of this wedge pattern drawn. We can kind of redraw that a little bit. So, you know, you're testing an important area, very similar to the SPY, nothing too crazy. The Nasdaq's pretty much the same as well. Just looking for a bounce at some sort of a higher low, and then a continuation of this short-term trend, but hopefully turning into a longer-term trend to the upside. The ARK ETF down 5% today, and this one's been tough because this is now the second time that the ARK ETF has had a failed breakout of this range. You see this yellow range it's been in. It tested a breakout over here, that failed, and then it just, you know, days ago retested the same exact breakout, and that failed as well. So it is a little bit tough. You do have a bearish engulfing candle at the top. I think we talked about that last week. Actually, no, that must have been, yeah, that was Friday, so I wasn't streaming. So no, we did not talk about that. We probably talked about it last night. So you did get that. Now you're seeing the fall through price action. We did also talk about this last night, this wedge pattern. It looks like you're kind of breaking down from it. So the support I see now is around 42. Just kind of look at these lows, then around 40, then 36, 35, 35 to 36. So those are kind of your three next steps on the way down. We'll see how it tests them, if it does test them. That's the ARK ETF. And I did forget to mention this, Danny in the chat saying QQQ's after hours went up. Yeah, already a lot of these charts have started bouncing after hours with the earnings. So just so I can give some context. Yeah, the QQQ is already up 1.4% after hours. That's a huge move. SPY's up 0.8% after hours. and the ARK ETF is up 2% after hours, so you already do a very large bounce after hours. We'll see what they look like in the morning, because we still do have some big earnings tomorrow before the market even opens. But yeah, you already are starting to see a little bit of that bounce taking place after hours thanks to earnings. So there's that. The Russell, I think it's held up pretty decently. I mean, you look at most of the other indices, all pretty much down over 1% today. The Russell 2000 was only down 0.62%. So it's actually holding up well, because you look at something like the SPY, it's already kind of taken out these previous day lows and it's just trending lower. The Russell's actually done a pretty decent job of just holding sideways. I'm sure you've seen a lot of small caps. You're like, all right, the S&P's down like a couple percent already on the week, and it's like, all right, probably some of these small caps are going to be getting down like 5% or something at least, and a lot of them are just really kind of flat. It's really interesting to see a lot of them hold up very nicely. So we do have that 1 hour range I was talking about last night between 178.5 and 183. You're kind of still in it. So you ended up holding yesterday's low, which is really interesting, because again, you did not do that on the other indices. So just something to keep in mind. And that's pretty much my coverage on the indices. Let me take a look at the chat now. And that's your stock market update. NASCAR Out says, anyone interested in phase? I was looking at it when it was a SPAC. It was like BRPM or something. And I'm still kind of been looking at it a little bit. I haven't really looked at it since the merger. But we can take a look at it. I want to see how it's doing. We did talk about it on stream last week as well. Yeah. Just a SPAC or an X-SPAC doing an X-SPAC thing going crazy in both directions. So, you know, not much I can do on this chart to give any sort of analysis, but we can just look at the price action. It's gone up, it's gone down, it's gone up. It's probably going to go down again at some point, and it's probably going to go back up again at some point. So that's my prediction. But yeah, no, I'm actually really interested to see how they do over the next couple of years. I haven't really looked into them too much. I think way back in like months ago, we might have looked at like one of their reports, like their investor presentation or whatever, like way back over here probably or something. But yeah, it's interesting. Connor's saying biggest volume day on Walmart in a while, candlestick was green, so went up from open close. Yeah, so before we even look at the swings tonight, let's actually look at some of these earnings names. That's a pretty good idea. And again, not that the charts are going to mean much when we have earnings, but we can take a look at, let's get started with, let me see what's the best way. Let's look at, all right, let me just do it like this. Alright, so we're going to be doing two from each day. Alright, so let's get started with two names that had earnings today, which is Google and Microsoft. So this is what the chart looked like before earnings at 105 is where it closed. Then it made this move up to about 110 after the close. So for Google, you're really just in this range between like 105 and 120-ish. It looks like you tested the bottom of the range into the close, and then with the earnings after hours, you kind of went back up towards the middle of the range. So that's kind of like just like the lower time frame view. On the daily, it does look a little bit more like a bear flag breakdown. So it's a little bit of a different story. And then again, with that after hours move up to like 110, it would just be kind of like a back test of that. So it will be kind of interesting to see tomorrow whether or not you reject that previous demand line and flip it into a supply line and continue to sell off, or if you reclaim that, sends you back up to the top of the range. So that was one of the names that already reported earnings today. Another one is Microsoft, closed at 252, went up to all the way at 269 at one point, but closed after hours at 262. So about, it looks like 10 points higher. This one, I would say it's like it broke out of this wedge, it back tested the breakout twice, almost 3 times, now it's heading up again. It's not bad. Nothing really apart from that. I'd say as long as you can hold this support around like 240 to 244 on Microsoft, it's not bad. You're definitely closer to the top of this little range between 240 and like 270. So That's Microsoft. Can you actually turn off extended hours? And then from like a more larger time frame view, it's just kind of like probably delete this at this point and then look at it like just a triangle pattern which hasn't broken out yet. Something like that. And then next up we have Shopify, which is going to be reporting tomorrow before the open. So Shopify was down 14% today. Let's see. So Shopify to cut workforce by 10%. The CEO said in a statement today, the move will mainly impact roles in recruiting, support, and sales. The company will also be eliminating over-specialized duplicate roles and groups that are not closely involved in building products. It's now clear that bet didn't. Let me read this actually. Shopify expected the number of shopping people opting for e-com instead of physical retail to permanently leap ahead by 5 or even 10 years, the statement said. It's now clear that bet didn't pay off. What we now see is the mix reverting to roughly where pre-COVID data would have suggested it should be at this point. So there's that, and they still have earnings tomorrow morning. In terms of the chart, it's another. I mean, all these charts are very similar. They're all like kind of like these large ranges, but you could also kind of fit some patterns into them if you really look into it. But the overall range for Shopify is just 30 to 41. And then maybe if you want to kind of really connect all the highs and lows, it looks a little bit more like a downslope channel. It's kind of the opposite of Google, because again, Google is very similar. It's just a range, but it's kind of like an upsloping channel within. So it makes it a little bit bearish. And then this one, it's just a range, but it's a downsloping channel within. So it makes it a little bit bullish. Just a very slight difference. Yeah, huge gap down today. Did end up closing the daily candle with the bullish pin bar, but again, the earnings are going to be the ultimate deciding factor for the next couple of weeks, at least, of this stock. So that's Shopify before the open. Then we have Meta after the close tomorrow. In terms of its chart, you've got this supply line breakout, this white supply line. You broke out of it. You're now back testing it. You're also testing all these lows from June and July as support. It's kind of been in this range between 154 and 173 since the beginning of June. It got above it for a few days when the market was rallying, and now it's kind of back in it. But the larger term view here is a massive bullish shark. This is actually a premium swing that hit the first target, so it was already marked green on the sheet, but it only hit one of the targets, and now it's kind of back down, testing a huge level. So it's testing a big level. Again, earnings will kind of decide which way it goes. And then on Thursday, we have Amazon first off. This was another premium swing. It almost hit the second target, actually, basically hit the second target. But Amazon is now retesting a breakdown off this zone. You can see this zone between 116 and 117-ish is pretty important. It's got highs over here and over here. Now it's testing a breakdown back under. You do have a gap fill around 111, and then some support around 106, and then the major support around 100, which used to be resistance back in like 2019 and 2018. And then on the upside, you've got some resistance really just in this whole entire area. So it's a very, it's a very choppy chart. You've got so many different highs and lows in this whole entire area. If you want just one large range for Amazon, I'd say between 100 and 130, a 30-point range, which is huge. And again, earnings on Thursday. And then we also have Apple. I'm not a big fan of Apple's chart here. I loved it when we were down over here, but now you kind of rallied a lot. You could start drawing out like these demand lines. It's going to be testing a breakdown of these demand lines. So like I would just flat out be bearish on Apple right now if there wasn't earnings this week, but earnings kind of turned it into a 50-50 for me. But you can see you had this huge rally. You've lost volume on the way up. You rejected pretty much a test around the 200-day moving average. You also kind of rejected the same highs back from over here, which were also the lows like over here. I mean, that's a very, very bearish chart to me. And again, it really means nothing. Like even if this was a super bullish chart, it wouldn't mean much. But just so we can see the context heading into earnings, it is something to keep in mind. But those are just some earnings charts, so you can kind of see how those are looking ahead of earnings, and I'm sure we'll see how crazy all of them look after earnings. Now, let's just do a couple more. We had Tesla report last week, made a nice move all the way up to around 840-ish. And now it's kind of falling back down into a potential support area is what I'm looking for, around 750 to 760-ish. It was all of these highs over here. You can see all those highs. It's also potentially a gap fill to get to the lower part of that range. and this previous supply line. So this yellow box is an area that I'm just going to be keeping an eye on Tesla in. We also had Snapchat report last week, a large gap down there. This is breaking a huge support at 1050. You can see these lows over here. I mean, the next support I see on Snapchat, it's all the way down to $8. So it's kind of in the middle of nowhere. I mean, this chart's kind of just like a gamble right now, but those are your levels. So I just want to also give an update on some companies that already reported earnings from last week. So that's a little bit of an earnings chart segment. Now let's talk about the swings. All of them were red today, unfortunately, but most of them are still in profit. CLOV is still in profit. I mean, yeah. I alerted this at 237. The first target's 284. It went from 237 to 280. Just had to go up 4 more cents, and now it's pulled back with the market. It's still up 7% since the entry though, so it's still in profit. On the 4-hour, and this was another crazy part from today, but you ended up getting that classic bearish divergence that we talked about last night on the stream, and you kind of had another red day, but you did actually have this bullish hammer candle form. And then it got followed up with selling. I mean, it just didn't really make a lot of sense to me, but it is what it is. So now you are testing this 250-ish area, which is a pretty big level. You can see with support over here, you kind of broke above it, back tested over here. It was your support from literally today already twice. So that's the key level to keep an eye on. The Uber swing, still in profit, but was in a lot more profit last week. It's still up 4%. Really not much of a technical change here, just kind of pulling back. You do have this gap fill just above the entry of the swing around 2178. Just would like to see higher lows being formed. Best Buy, another one. And again, if some of these fall down to the entries, I'm going to be having to mark them as a break even because a lot of them were up over 10% since the entry, and now they're all the way back down. I'm not going to let them turn into failed trades. At worst case, there's going to be a break even, like I never even alerted it, right? But this is where you're at. You do have a gap fill to the upside and resistance at 75. This was the level we were talking about last night on the stream. It looks like you just gapped under it. So if you do start rallying back up, that's going to be the key level to watch, $75, and then maybe some support around 69. If you can hold that level, it even dates back to over here, these lows. So those are your short-term levels for Best Buy. Fisker to Marcus, again, I just said the same thing for CLOV, Uber, and Best Buy. But Fisker actually is a example of a break even. So the Fisker swing was alerted at 910. It went all the way up to 1032. Never got to the first target though. Fell back down to the entry today. And if you're in the Discord, you got the update in the morning that I have to mark it a break even. It is what it is. You know, it's not a failed trade. It's not a winning trade, even though it kind of was in profit for a good amount of it. There's always going to be more in the future. In terms of Fisker in general right now, I still think it looks good outside of this huge wedge. It's still above the $8 support. The one thing that's a little bit fishy to me though is the 4-hour. You broke this demand line today, this red demand line, and this little yellow zone, which used to be resistance. So you did have a failed back test, unfortunately. So like short term, you have a little bit of support around like 877 from these lows and this high over here. And then if that breaks, the mega support from your 3 major lows to see around $8. So yeah, just a lot of that 4-hour classic bearish divergence that we were talking about last night on stream on a lot of these different charts is it's playing out. And you know, bearish variables tend to play out in bearish markets. We're still in a bear market, you know, but again, if we can get these back tests on the larger indices, that's what could set us up for a very different next few months. But we have to get the price action first. We have to get through earnings and FOMC and GDP and all that stuff first. So just taking it day by day, and that's pretty much my update for today. All right, so appreciate the green hearts in the chat. Key on trades. Risky Seed says, aside from Tesla, what do you see EV stocks doing? I really haven't looked at much. I mean, we just looked at Fisker. Lucid had a failed breakout. Was trying to break out of this $21 resistance area from all these lows and highs. Got above it for a day. Now you can see it's very clearly back under it. I don't know, let's look at RIVN. Yeah, it looks like a lot of them, you know, they had rallies with the market over the past couple weeks. Now they're kind of pulling back a little bit. They are rejecting previous supports as resistances. It's not a great look in my opinion. It's not a great look short term. So I'd say the overall picture for a lot of these names, I'm just going to keep it to a few that we're going to look at, but It's just, and this is kind of for a lot of different stocks as well. You've put in the first major higher low of the year for a lot of these different stocks, and now you're starting to pull back again. So all you're really looking for is any low higher than your previous swing low, okay? These are your swing lows. Start charting them out on all of your favorite stocks, your swing highs and your swing lows. The main thing you're looking for in general, on so many different names, you can even go look at Bitcoin, is just a higher swing low. Wherever you start pivoting, you just want it to be higher than your last low from whenever you just recently bottomed at. So that goes for Fisker, for CLOV, for SoFi, all these names that put in those higher lows over the past couple months. That's what you want to look for over the next couple of weeks. And once we get past this week with all these large cap tech stocks reporting, we're going to be getting a lot of these mid caps reporting earnings within the next few weeks. So, that's something to look at as well. And yeah, let's take a look at a couple other names. Look at the meme stocks for a second. AMC getting beaten down off this high it put in last week. I mean, it's down quite a bit in 4 days. From that exact high, it's down 23% in 4 days. Of course, had a very nice move on the other side of the fence before that. And now it actually is retesting this key level. You can see this $14 area was resistance over here. So it's retesting that now. Maybe this is something to keep an eye on lower time frames. Let's see if this looks a little bit different. Maybe you could try like a little bit of a wedge, and we also did look at that wedge in the beginning on the stream for the SPY, which looks like this. So you could actually have a lot of low time frame wedges forming, which could make the next couple of days fun intraday. Again, I don't know what the earnings are going to look like. But AMC, I would probably try to wedge like this. And then GameStop, let's start off with the higher time frames. Huge pullback off this bearish engulfing candle high on July 21st. It's down about 20% since the high of that day. It's kind of back in its mega range, which I don't know, it's kind of weird. I don't know if I delete my GameStop chart, but we talked about this range for a long time. It's just sucks that you broke out of it. You even back tested, and this is only what you got. And I know there was the split or whatever, but just oh, I didn't delete my chart. It's because of the split. All my stuff is up here. Yeah, so I had all of that charted, but it's kind of messed up now since the whole entire chart's much lower. But yeah, maybe you could look at GameStop like this. And this is actually really interesting. Look at this demand line on the daily, or this trend line that GameStop is now testing. So if you're bullish on GME, you better hope that this holds in the next couple of days. So there you go. Next is saying Twitter has a 1 hour head and shoulders. I think you're talking about inverse head and shoulders. Yeah, I guess you'd call it that. It's a little bit extreme, but something like this. Typically you'd want the head to be a little bit more parallel to the shoulders, but I think just in general for Twitter, this is something to keep an eye on because of this whole entire resistance area. If it breaks this, and you've got this gap fill all the way up like at 44.71 in that previous support area. So like a break above this zone, then you have a very clear kind of like 10% area with not a lot of resistance in between. So it is an interesting chart on low time frames to keep an eye on. Alright, so that's going to be pretty much the updates and everything for tonight. Thank you for watching the stream. Make sure to hit the like button if you don't already. Hit the subscribe button. Appreciate all the support. Again, this is a crazy week for the market, so keep an eye on everything. Join the Discord, links in the description. In Premium, I did alert calls today. I always like doing like these trade recaps from Premium. I alerted calls towards the end of the day. Pretty much like right over here. And then it just kind of chopped around for an hour. I marked them like a break even, but they were slightly up when I marked them a break even. And then like literally a minute after it finally shot up, but it was just tough because there were lottos and the market was about to close. And I mean, you could just see the analysis over here. So I alerted these at 1.35, I think. 135. I marked them as a break even at 143, even though it's technically up, 8 cents per contract. But it is what it is. And then actually like literally, so that was at 350, and then at 355 they went up 20%, which is what I was hoping for. But I just had to kind of stay on the side of caution, as I said, just kind of wait to see what was going to happen. But regardless, we're still on a 3-win streak from the last couple of days, I believe, and had that nice put trade yesterday. So I already was planning on taking it a little bit easier to start off the week. I talked about that yesterday night on stream. But now over the next couple of days, I think there's going to be a lot more of lower time frame opportunities to look at with all the volatility that I'm expecting to see. So we'll see if we get that. And yeah, hit the like button. Let's one more like to get 20 likes, hit that. Thank you for watching the stream. Have a great night and peace out.